Asia is significantly cheaper.
Right.
And while tariffs are, of course, an overhang, we still find that there's been really, truly great investment opportunities outside of the US that, of course, investors have been considering this year.
Hi, good morning, viewers, and welcome to episode 6 of Unscripted in Conversation with eSpring. I am delighted to have Vis Nayar, our Chief Investment Officer, with us again on the show. Vis, good morning. All right, let's have a seat in the office in our lobby and have a chat this time.
We are mixing things up.
We're mixing things up. Yes, we're mixing. But look, great to have you on again, Vis. Lots to talk about. So let's have a seat and kick it off.
Sure. Look. I was on this, a few weeks back?
You were?
And I think we started 2025 with this idea that the only certainty was volatility.
Yes.
As we reflect back on what we talked about last time, we talked about the impact of tariffs, the worries about deals, and I think what we're seeing in the last few days is a little bit more certainty, a little bit more information and data, as we'll obviously get to as we talk through in the next few minutes on this podcast.
Absolutely. No, we look forward to it. I think it'll be exciting. I think our viewers are going to find it very useful as well. You were at the Reuters Next conference very recently, Viz. You were on a panel. Tell us a little bit from that conference. What did you talk about? What did you kind of take away?
The key thing that we were really, or I certainly was talking about, was the impact of tariffs and the effects it has on the global markets.
Yeah.
But of course, as investors, it's not so much just growth, but it's also related to what are the investable actions we need to consider.
Sure.
So eSpring has been very, very clear throughout 2025 that this volatility has led to a reflection on US exceptionism and subsequently an idea that diversification becomes key this year. I think we know that US assets and US risk assets have rallied strongly since perhaps the last time we were talking. But what is true is that in 2025, despite all of that, in local currency terms in Asia, it's a slightly different story.
Yeah.
So other markets, other assets have also rallied strongly.
Right.
And so that's always a reflection. The journey this year has shown that the US markets haven't, massively outperformed other markets, as we've seen in previous years.
Right.
That leads investors to think very carefully about where they might allocate their capital. And that is, of course, the core crux of eSpring.
Yes.
We're asking about investors, we're thinking about how we consider the starting point valuations. Look, Asia is significantly cheaper.
Right.
And while tariffs are, of course, an overhang, we still find that there's been really, truly great investment opportunities outside of the US that, of course, investors have been considering this year.
Fantastic. Did you feel that there was resonance at the conference around those themes?
So
are people getting there?
I think people are aware and can clearly hear that message around diversification, the message around a widening of the investment opportunity set.
Yes.
I think certainly the recovery in risk assets in the US have perhaps made people feel a little bit more comfortable about it. I've been on 3 or 4 conferences in the last few weeks, and I think the key message is that US assets have rallied strongly.
Yeah.
But the thing that investors keep in mind is what is the future returns. And so in terms of future returns, those US assets are still very significantly overvalued, certainly against the rest of the globe.
Correct.
And that is where investors can consider diversifying into Asian assets.
Absolutely. I think we are seeing that pivot, Viz. I've seen 3-4 CIOs of some of the largest banks now moving towards an Asia call. Global diversification seems to be an increasing in the echo chamber as well. Let's do a little bit of fly on the wall stuff. You have your investment team meetings every week. If all of us were flies on the wall in your investment meeting with all of your PMs and strategy teams and all, tell us what's happening in the weekly meeting these days.
Right. It's been an interesting year. So of course, the narrative is changing. I think when we listen to the forecast, we're looking at what's data is coming, what's the hard data, what are we seeing, and then how that implies or how that affects our portfolios. That's the key thing. So in April and May, we have all been surprised by the lack of an uptick in tariff revenues.
Correct.
But in June, we're seeing that increase. That has it's a hard piece of data that supports one of the hypotheses the investment teams have had, which is that US inflation is likely to increase.
Yes.
So in the investment meeting, we
Yeah.
start to consider, for example, the impacts on tariffs,
Sure.
how that affects Asian companies, because we
Sure.
are Asian investors,
Right.
how that affects the attractiveness of Asian equities and bonds
Yes.
versus alternative equities and bonds in other parts of the world.
Sure.
But then also looking at the microstructure, the actual differential return. So for example,
Right.
at the start of the tariff noise,
Yes.
a lot of people rushed into domestic plays, into defensive names, which
Correct.
effectively are less exposed to tariffs.
Correct.
As we go through that tariff noise, those defensive names start becoming relative outperformers and
Yeah.
become relatively more expensive
Sure.
versus the exporters that are in the eye of the storm.
Yeah.
And so an example of a discussion might be, when do you need to start considering the portfolio,
Yeah.
and whether you need to revert back into those exporters,
Sure.
because of course they have fallen to such an extent that we need to actually think about that.
Yeah.
And again, we think of diversification at the portfolio level,
Sure.
the opportunity set,
Yeah.
and so our discussions might be how we might consider switching back, what are
Yes.
then the further considerations. We might think about the further impacts of policies,
Yes.
and more recently, we've started to see a trickle of deals. Now that looks like a very complex patchwork, you know.
Right.
And then we think about the actual company effects. How do companies invest capital? How are they going to think about the supply chains?
I'm going to just stretch that a little bit further, because we're very fortunate in terms of the strategies that you and your teams are responsible for. And it starts with Asia equity across value and growth, Asia fixed income, both local currency and US, Japan equities, GEM equities, our quant desk, our India strategy run out of Singapore. When you are looking at an investor base of that nature, how do you think about risk? And risk from a CIO perspective, when you're talking to your PMs, how are you thinking about risk? And then I might stretch you to ask, how do you want investors thinking about risk? So it's kind of a CIO view versus an investor's view as a client, let's say.
Right.
Thank
From
you.
a client's perspective, diversification has been unnecessary for a number of years.
Yeah.
And what I mean by that is exceptionism has meant that a relatively small number of assets in the US in particular,
Yeah.
but we mustn't forget tech champions in the likes of Taiwan as well. These companies have essentially driven global markets for a number of years. So in that world, no one wants diversification. Concentration, as represented by indices, by the way, market cap indices concentrate a lot of capital into a relatively few large cap names.
Sure.
And when those actually outperform, you don't need to do anything else. Passive investing, indices, they get you great returns.
Right.
What we're seeing as investors, and we're speaking to clients rather, I should say, in our discussion with clients, for the first time this year, there's a little bit more discussion around the need to diversify.
Yeah.
Clients still feel
Yes.
that diversification hasn't been needed, but ultimately that's a discussion that's much more interesting and relevant to clients perhaps than they have been.
Right.
When you go cross-asset, I think we've seen the reaction in markets. Again,
Yeah.
clients are worried about this. The reaction in markets has been different in fixed income and in equities.
Yeah.
So we think about the fixed income markets worrying about fiscal deficits,
Yes.
the level of government debt issuance,
Right.
and so we've seen the long end of the US curve significantly rise.
Right.
Whereas equity markets have also remained, risk assets have remained strong. And there's some conflict and tension behind that,
Right.
certainly related to those two things.
Sure.
So clients are starting to be much more aware of diversification.
Yeah.
Now from an investment perspective,
Yes.
eSpring, and I'm very proud to say this, eSpring runs a fairly diversified business. That's a key
Absolutely.
thing for an asset manager.
Absolutely.
What that means is that we have solutions for the different regimes.
Yeah.
So that means that in 2024, a growth focus was very important. 2025, a value focus has come back into effect. Income strategies have actually navigated both years reasonably well.
Yes.
And when we think about multi-asset positioning,
Yes.
well, it's been quite active. And what I mean by active is that we were looking at adding risk earlier part of the year.
Sure.
And really post the election campaign,
Yes.
we've been recommending sort of near-term rallying in equity markets.
Sure.
That was the case. Then as the tariffs came in, you have to actually adapt to that. because the tariffs were certainly larger and more material than I think the market consensus. You need to think about your positioning there.
Right.
And then we see the delay in tariffs, and that 9th of April is singed in my head, right, really, because the journey over those 24 hours was pretty phenomenal. Nothing that we've seen.
Yeah.
And so you need to adapt to that and think about and review risk again. And so I think, I remember questions at the time, have you seen anything like this?
So we've been around the block.
We've lived, we've been around the block. But what is true is that investors who have been investing perhaps just for the last couple of decades have always seen pretty strong bond markets, pretty strong equity markets, sometimes double-digit returns frequently.
Yes.
But something else I want to talk about, the correlation between equities and bonds.
Yeah.
So again, historically, certainly for the last 2 decades, bonds have bailed you out.
Yes.
When equities have underperformed.
Correct.
And that's the Fed put.
Yes.
Certainly this year,
yeah.
in the middle of the tariff crisis in April, we saw bonds going down and equities going down.
Correct.
So I think that investors are open to this idea that the times are a little bit different to what we've seen for the last couple of decades, and so diversification more than anything else is the key thing that might just help you as we try to navigate this market volatility. Now, I talked about the client, and my postscript here is going to say what the clients think also really is how we think about the world, because we're looking after their assets.
Correct. What an amazing punchline. I was going to ask you what the punchline is, but we're going to take that as your punchline, Biz. It's always great to hear you. It's always great to get your insights. Thanks so much for being here this morning. Really enjoyed it.
Thank you, Salman, as always.
Appreciate it. Thanks.
Pleasure.
投资一定有风险，基金投资有赚有赔，申购前应详阅公开说明书或投资人须知。